there is certainly no reason to be concerned about where gold and silver are ultimately going. No, I think we're far from seeing the end of the gold and silver boom, not even close to it. And you can see that by the continuing increase in purchases and deliveries off of COMEX. India just bought another 150 or 60 or 70 million ounces of silver just in the last month or two. And this is not stopping, and it won't stop. Quite to the contrary, I think gold and silver in this environment that we have coming in front of us, this inflationary weak dollar environment, will do exceedingly well.
Various factors influence gold prices: geopolitical tensions, interest rate policies, and global supply and demand dynamics. Often regarded as a safe haven asset, gold tends to perform well during periods of uncertainty due to its low to negative correlation with other asset classes. It is particularly valued as a hedge against geopolitical instability, offering stability during crises such as wars. Despite significant price declines in precious metals following the reelection of Donald Trump, the long-term fundamentals for gold remain robust. Both gold and silver also show strong technical positioning, indicating potential resilience and growth ahead. Andy Schectman remains steadfast in his belief that the long-term outlook for gold and silver is robust, despite the possibility of short-term gains in equities, cryptocurrencies, and even the bond market. He views the recent declines in gold and silver prices as anticipated and temporary, rather than indicative of a broader trend. Schectman asserts that the bull market in these metals is still in its early stages, with the full impact of ongoing economic and geopolitical developments yet to be realized. Several factors continue to support gold's outlook. Rising expectations of higher inflation strengthen gold's role as a hedge against eroding purchasing power. Additionally, proposed tax cuts under Trump's administration are expected to significantly expand the budget deficit, raising concerns about the creditworthiness of U.S. public finances and further bolstering gold's appeal as a safe haven asset. Schectman emphasizes the sustained global demand for precious metals, noting that this trend signals a profound shift in the global economic landscape. He explains that nations increasingly seek alternatives to the dollar-dominated settlement system, further underscoring the strategic importance of gold and silver in the evolving financial order. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
Low interest rates, weak dollar, that's highly inflationary and loss of purchasing power, really. And I think that's what he will do and what will happen. So, there is certainly no reason to be concerned about where gold and silver are ultimately going. At the same time, because of his policies, we could see, strength in the equity market, strength in the crypto market, and we could see that for sure, and strength in the bond market, believe it or not, because at the same time you got all these people buying crypto, it's actually stealthily supporting the bond market, and a lot of people don't even understand that. But if you look at the main trading pair between Bitcoin and the dollar, it's USDT, Tether, and USDC, which is, I believe, backed by Goldman Sachs. These are the stable coins that are 85% invested in treasuries and the rest pretty much in dollars. And so as people are leaving the legacy system, they're actually supporting it through these crypto vehicles that are actually putting their money in U.S. treasuries to help support the system. It's an interesting dichotomy. But any way you look at it, no, I think we're far from seeing the end of the gold and silver boom, not even close to it. And you can see that by the continuing increase in purchases and deliveries off of COMEX. India just bought another 150 or 60 or 70 million ounces of silver just in the last month or two. And this is not stopping, and it won't stop. And look, tariffs are legitimate, right? Tariffs can be a legitimate economic tool. Sanctions are not. It's financial warfare. And that's really what they're all angry about, is the continual use of sanctions and tariffs that are kind of mirrored as sanctions. I mean, they actually are sanctions. I mean, tariffs are supposed to support your domestic manufacturing and production facilities, which we really don't have. So what are we actually protecting? Nothing. We're just adding a tax onto the American consumer. We are, in effect, sanctioning these countries for having the nerve to try and find a different settlement system. And it's funny, when you look at what he said, if you read what he said about that, I don't know if I wrote it down. Basically, what he said is that if the BRICS even think of doing a common settlement currency, well, they're in big trouble, right? Well, or common currency, a common BRICS currency to upend the dollar, that's not what they're doing. And as Jim Rickards says, it'll be a decade before they do that. And I'm okay with that statement. What they're trying to do is find a common settlement currency. That's what it's always been. A common settlement currency where they trade in local currencies. And as Jim also says, you don't even need to have that fully in place. If you just use gold on a net basis, you trade in local currencies and then settle any net differences, not gross, but net differences once a month, once a quarter in physical gold. The banks pay the countries the local currency, they settle back and forth, and then at a pre-described time, you settle net in gold. Well, that is in essence a de facto settlement system. It's nowhere near what they will ultimately do. So they're not trying to roll out the BRICS currency. They're trying to find a settlement system, which is different. And it will only crystallize their resolve. And you're going to see pushback. You see China just yesterday said, we're not going to send all of these rare earths that are used in things like satellites and radars and all of these high-tech things, that they all end in idiom. And he's pushing back against this. So yeah, no, I don't think that we've even begun to see the ultimate ramifications, and nor do I think we've even begun to see the end of the gold and silver bull market. Yes, the knockdown in gold and silver was easily predicted.
Silver has had an excellent 2024, with prices up around 27 and 28% for the year, demonstrating impressive resilience. The global precious metals market is growing strongly, driven by increased demand in the jewelry, electronics, and automotive sectors. During periods of economic uncertainty, institutional investors and hedge funds have increasingly turned to precious metals as trusted safe haven assets. This trend is reinforced by central banks, which reported net gold purchases of 60 tons in October 2024, the highest monthly total of the year, according to the World Gold Council. Andy Schectman maintains that the long-term outlook for gold and silver remains undeniably strong, with their importance in the shifting global economic landscape becoming more evident. He points out that earlier forecasts predicting gold would dip below $2,500 and silver would fall into the $20 range proved incorrect. While silver briefly touched the $20s, it swiftly recovered to over $31, underscoring the enduring resilience and demand for these precious metals. Now, let's redirect our attention to a video.
People were saying gold's going to go below 2,500, and it didn't. And silver was going to go into the 20s. It didn't. It may have touched it for a second, but here we are back up to 31 and change. So I think that that's exactly where we've gone. First of all, you have a large portion of the world who says, thank you for doing that. We would like to buy more and stand for delivery. But these are banks that are facing an existential threat to their balance sheet. 4 to 6 billion ounces short in silver in London, 700 to 800 million ounces short on COMEX, and massive short in gold on both sides of the pond. They are using it because I think they understand ultimately it's going higher, and it is a fool's errand to continue to naked short. So yeah, they're going to do all they can to cover these positions, which can really end up putting them out of business if it were spike high enough. And that plays right into the hands of those who are playing the long game, like the central banks of China and their sovereign wealth funds and the People's Liberation Army and the central banks of India and their sovereign wealth funds and of Russia and on and on and on. They're using this environment to cover. And, they shouldn't be this short to begin with, but it just goes to show there's great demand and it's hidden at the highest levels of the world. But I'll go back and I'll simply say this, Dunnigan, there is no reason that the Bank of International Settlements, who thinks years and years and years in advance, would have reclassified gold as the only other tier one if it wasn't going to be part of the game. And the central banks, who all you hear is Bitcoin, 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 but what are the central banks buying? Oh yeah, they're buying gold and silver. They're not buying Bitcoin. What is a guy like Bill Gates buying? Farmland. It's like tangibles are what the big money is buying, commodities around the world. And whether it's rare earths or soft commodities or precious metals or base metals, that's what the biggest, most informed money in the world is buying. And that's where my skepticism, and again, guess you could say I've become somewhat jaded, and I try not to be. I try to look at this pragmatically, but is it a psyop, if you will? Put everyone into a few areas, money markets, handful of stocks, and into cryptos, and try and pull the rug and blame him for it? Maybe. Hopefully not. While at the same time, you don't see countries saying, other than El Salvador and a few others, that we're going to massively accumulate Bitcoin. When you look at what Trump said about the strategic Bitcoin account, it wasn't to buy more. It was to take what they already own, that they've confiscated through, criminal activity, and use it to pay off the debt. It was Cynthia Loomis from Wyoming who said she wants to revalue the price of gold and take some of the proceeds of that revaluation to buy more Bitcoin. But that's not something we're hearing or seeing from all of the world's central banks. So yeah, and I think it gives you a roadmap to where this ultimately goes. And remember, the BIS, they know the playbook better than any of them. They're the central bank. They make the rules, like it or not. They wouldn't reclassify gold. And then you look at the way it's all being accumulated in Europe. It's almost completely uniform across all of Europe that they all have the same amount of gold in relation to their GDP. And that's where you got guys like Neuenhaus, the guy that writes for Money Metals, and he's saying it is a stealth plan by the European banks to all have roughly the same amount and then to revalue gold, the way Cynthia Loomis talks about, the way the head of the Dutch National Bank talks about. You cannot have a cryptocurrency that is that volatile backing a system, but you can with gold. And I think that's the ultimate play here. So yeah, you can see as it turns right back around, to me, you cost average your way back in if that's what you're going to do. Or I think ultimately waiting in this volatile world we live in, I don't know how it plays out, but uncertainty is smoothed out by cost averaging. I guess that would be the easiest way if you still believe that gold and silver have a pathway. I do, to my soul. And, think about misdirection. We're kind of being misdirected here into all of these places as the rest of the world gobbles up the gold and the silver and the rare earths and the base metals and the soft commodities and the farmland. They're buying up the tangible. So it's just food for thought.
Gold and silver closed November with losses, declining by 2.74% and 5.17%, respectively. This marked a reversal from their strong October performance, which had been fueled by monetary policy easing in the U.S. and Europe, robust central bank purchases, and a reduction in import taxes in India. However, the landscape shifted in November as a strengthening U.S. dollar and rising U.S. Treasury yields diminished the appeal of precious metals as safe haven assets. How do you see gold and silver performing in 2024? Do you think their roles as safe haven assets will strengthen or weaken in light of global economic uncertainties? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.